So we're going to roll right into the next fireside chat, and I am moderating it. I was supposed to be Peter McCormack, but luckily they were able to find another Bitcoin podcaster to fill in. So please join me in welcoming to the stage the co-founder and CEO of Lightspark, David Marcus. Please give him a warm welcome to the stage.
All right.
Okay. How are you?
Good.
It's I'm a little bit glad actually that Peter was not able to make it because I wanted to chat with you for a while. So what a perfect
Yeah, this is great. This is great.
So for those that don't know you, I announced your current role, but you have quite a long history prior to Bitcoin, let's say. Can you give everybody just kind of the 50,000 foot view of your journey to give people a little context for kind of where you are today?
Sure. I'll try to go really quick. I've been building companies since I was 23, and actually in Switzerland. I was in Switzerland at the time, and building companies. The first was an ISP. The second one actually ended up being a mobile company. I sold the first one, started the second one, and then I realized that I needed to be in Silicon Valley to actually really have the impact that I wanted to have. So I moved to Silicon Valley in late 2007, sold that company that was a mobile payments company to PayPal. Ended up running PayPal a few months later, totally unbeknownst to me how that happened.
As one does. You know.
I mean, I don't know how it's still to this day how that happened. But then wanted to go back to building. I was thinking of leaving, and Mark Zuckerberg asked me to come to Facebook to build messaging. So I took a sabbatical from payments for 4 years, building Messenger and messaging platforms at Meta. And then I was so frustrated with the lack of innovation and disruption in the way that money moved around the world that I wanted to go build in payments again. And that's where Libra was started. And actually, we can talk about that later. But like one of the first things I wanted to do is actually use Bitcoin instead of building my own, or our own at the time, Corp chain. And the problem is, we needed to reach billions of people on WhatsApp and others. And at the time, Lightning was early and couldn't scale that much. So we went a different route that was ill-fated because Janet Yellen woke up one morning of June 2021 and basically pulled the plug on it. So I packed my bags and started Lightspark. And the big insight of the Libra journey was actually if you're trying to change the way that money moves in such a profound way, you have to build it on top of something that's truly neutral, truly open, truly unassailable. And the only thing that's fit for purpose is Bitcoin. And so we launched into that 3.5 years ago with Lightspark, and we'll talk about that, I'm sure.
So, I mean, I actually didn't know that you wanted to use Bitcoin initially when you were at Facebook. So, I mean, were you just at this point after the Libra or DM it got renamed to, right? So
yeah.
It was an interesting saga there. I was only half paying attention to it at the time, but then later, as I went deeper down the rabbit hole, started looking at these things more. But were you? I mean, it seems that you've just been itching to build on Bitcoin this entire time. I mean, was that really at a certain point you said, okay, I need to stop working kind of for these larger corporations and build on this thing that there's no throat to choke, let's say?
Yeah, exactly. And I actually use that a lot. Yes, I feel like, look, at the end of the day, what actually motivates me to get up in the morning and work 80, 100 hours a week on this is the fact that we are still moving money globally the same way that we were moving money in the 70s. And domestically, the payment systems have evolved and they're better. So we have real-time domestic payment systems all over the world. But when it comes to moving money from one country to another country, from one currency to another currency, from one bank in one country to another bank in another country, we're still using infrastructure that was built, in the 1970s. And takes 3 days, doesn't work Friday after 5 p.m., costs $50 to move, is a closed network that only banks have access to. At the time where we're talking about people driving cars with their brains. It's like, something's wrong.
It is quite a juxtaposition, and I mean, it always just boggles my mind. We all have to interact with the fiat system, right? We can use Bitcoin as much as I can, but sadly, I do still need to use banks and everything else. And the fact that it's like there are open and closed hours is just insane to me in this world that is globally connected. Bitcoin doesn't have a time zone. That's the beautiful thing, right? The blockchain is always tick-tocking. So can you talk a little bit about what you're building right now at LightSpark and kind of where this is going, where you see this industry going, and what you guys are focusing on?
Yeah, we had a big partner summit last week in LA where we're headquartered, and we had all kinds of companies coming from 15 countries. And I opened by saying that at LightSpark we were Bitcoin plumbers. And that's what I think we are. We are trying to make Bitcoin faster, cheaper, more efficient, just as a neutral settlement layer. And we started with Lightning, and we're still investing heavily on Lightning, and built another Bitcoin L2 that we launched about 6 months ago that's called Spark, that's backward compatible with Lightning that some people talked about here yesterday. And the goal is really have the most efficient settlement network for money. Then what you need to do, because at the end of the day, we all want Bitcoin to be part of everyday's transactions for billions of people, right? I think everyone can agree on that. And I think the definition of how you do that, and are you using Bitcoin the asset, or are you using Bitcoin the network, or is it an arc where you start by using the network and you don't even know, it's invisible? In the same way that when you send an email, you don't think about SMTP and TCP/IP, and Bitcoin, real-time Bitcoin is that for a transaction that goes from Switzerland here to the US, leaves in CHF and arrives in USD a second later, 24/7, on a Sunday morning at 1 a.m. And it's Bitcoin providing that. And we launched with SoFi, a bank, last week, and this is exactly the experience. No one using that product to send money from the US to all kinds of different countries around the world understands they're using Bitcoin. And I think that's stage one. So the first stage is make the network more efficient, use plumbing to plumb it into all of the domestic real-time payment systems all around the world, enable the services and the capabilities so that banks, wallets, and builders can actually build on it. And then gradually, in some cases, and that's also why we built Spark, because we wanted to make sure that people have access to self-custodial wallets, and people can have all kinds of definition of what's the definition of self-custodial, but to me that's fine. It's a self-custodial wallet that can receive Bitcoin in real time, and issuance of stablecoins on top of Bitcoin, which I think is really important. And stablecoins for me, I had my schizophrenic journey with stablecoins because they're fully centralized. And I'm like, what are we doing again? Are we doing Libra again with a stablecoin on top of a network that's also fully centralized? And then, the horse has left the barn, right? It's happening. Like, we're not bringing that horse back in the barn, so you have to adapt. And I think that we're better off having stablecoins on top of Bitcoin, a network that you can unilaterally exit to, like at any time, Bitcoin L1, so that at least the settlement network is fully decentralized, open, and neutral. And then you have a variety of stablecoins running on top of, but at the end of the day, what we're building is a series of technologies and capabilities where you can move money, any fiat, any stablecoin in real time, 24/7 at the lowest cost possible, all built on Bitcoin.
I think that's amazing. I just want to get into kind of more of what you guys are building, your philosophy there. But before that, on the stablecoin point, I mean, you have kind of been there since early days of this with Libra, of course, at Facebook. You saw the reception of it then from regulators. Obviously, right now, there is a different, let's say, regulatory environment. There's a different attitude towards these things. You see even the United States becoming very pro-stablecoin, pro-US dollar stablecoin. Do you think this is kind of the current state now? Do you think there's a chance that it gets back to if the regimes change, gets back to a less friendly environment? Or do you think now there's this acceptance that, okay, this is actually a thing that is positive for dollar dominance and hegemony worldwide?
Maybe, maybe not, but I don't care anymore. I'm building on top of something that humans, for the most part, can't interfere with. And so, they'll do what they do. As long as the settlement layer remains on Bitcoin, it'll still continue moving value unabated and unaffected. And I think, at the end of the day, that's why we're building on Bitcoin and we're such believers. I do think that there's definitely a massive, massive regulatory shift in the US. I do think that stablecoins play a very important role, and especially Tether. When you look at the impact it has had in communities and countries all over the world. And I think that the combination of a very good stablecoin with a lot of liquidity on top of Bitcoin, the most open and neutral network, is kind of the way that you actually move forward. And that's why we're actually super excited to partner with Tether on WDK, the Wallet Development Kit, because we think that their approach is 100% right, which is you have a wallet that is super user-friendly, and you have two balances in this wallet. You have your checking account, which is a dollar stablecoin, Tether, and you have your savings, Bitcoin, and the combination of both of these things is the equivalent minus lending of a thin bank account for billions of people all around the world, and we're very, very bullish about this. We think that this is the right approach, and if you can actually move value on top of Bitcoin, on top of having these high-quality wallets, I think we make Bitcoin be part of everyday payments for billions of people much faster.
I love this perspective because I think right now, especially in this era of Bitcoin treasury companies, there's been a lot of narrative focus on Bitcoin as this pristine asset, Bitcoin as the store of value. And obviously it is, and you need that store of value for the network to continue remaining strong, right? You want people to buy it and hold it. But your focus is very much on the medium of exchange side. Are you in kind of the Jack Dorsey camp that if Bitcoin is not used as a medium of exchange and also as a network for exchange with other things on top, that it's kind of failed if it's just a store of value? Is that where you sit?
Yes, 100%. Like, I fully agree with Jack on this, and I think, look, I mean, if we reread the white paper, which I highly recommend everyone doing on a regular basis, the intent was a peer-to-peer payment system. It was not like, let's hodl all the way to millions of dollars a coin, right? But both of these things are needed. I think it's kind of the most fascinating thing about Bitcoin is to be in it for long enough to see the incentive systems built so long ago play out. And it's fascinating to see that we couldn't be in the beginning of this utility phase for Bitcoin if so many people didn't care about the value of Bitcoin, institutions didn't hold it, ETFs weren't built, that the whole system is now caring about Bitcoin in such a way that it makes it stronger and more liquid and a better medium of exchange and better settlement asset between fiat currencies because of the depth of liquidity of people buying and selling Bitcoin at trading venues and in all kinds of different ways. So it was a prerequisite step towards a mass market payments utility phase for Bitcoin, which we're entering now at a rapid pace.
It is exciting to see, and I think a lot of people may have mixed feelings about stable coins because it's like, well, people should just use Bitcoin. But the reality is that hundreds of millions of people around the world use stable coins. This is is an extremely popular product, right? Mm-hmm. People want U.S. dollar exposure, and that's okay. They should want whatever they want, right? We're not here to tell them what to use. We've seen most of the stablecoin usage on network, Ethereum or Polygon or Tron. I've only personally used it on Liquid. USDT on Liquid is a very nice experience. Do you think we start to see more market share for stablecoin usage coming over to Bitcoin? I mean, is that your guys' goal? Take it off of these other, altcoin chains and bring it over to Bitcoin. Does that overall, that usage of the Bitcoin network for stablecoins, does that really just increase Bitcoin dominance overall?
Yes, of course. But I think it's also important to understand why it's a stablecoin on top of Bitcoin via Spark is actually much better than a stablecoin on top of an ETH2 or on other chains. The first thing is we're also payments people, so we understand what it takes to actually build a network that's fit for purpose for mainstream payments. And the one thing that I've always found jarring when you're using a stablecoin on top of many of these other networks is that you have totally extraneous things that are happening that are jacking up gas prices unbeknownst to people. And so suddenly to move $1, it costs you $400 on Ethereum. And it's like, what just happened? And it has nothing to do with the payments action that you're about to make, right? It's like the market driving the price of gas. And so, for a good network to actually win at payments, mainstream payments, for stablecoins and Bitcoin as well, you need to have stable pricing. So you know what pricing is. Imagine if you're just paying with your credit card, and one day you're buying a thing for $10, then the next day you come back to buy the same thing for $10, but it costs you $100. This would never work, right? So on Spark, what we've done is fixed fees. So you always have fixed fees to move stablecoins that are very low, 1 cent. And you're paying those fees in the stablecoin you're transmitting. So you never have to hold another asset like ETH or SOL or anything else to pay for fees. You just pay like a normal payments network. And the one thing that we're really excited about on the convergence between fast, real-time, low-fee stablecoin transmission on top of Bitcoin via Spark is actually that you can create really compelling wallet products, and issuers can create really compelling experiences where you pay back rewards or yield for people holding the stablecoin in Bitcoin. And so this is a great Trojan horse for us to actually get more Bitcoin adoption. If people are using US dollar denominated stablecoins inside of wallets, but they're earning Bitcoin rewards every time they hold it or transmit it, I think we can actually create billions of Bitcoin-enabled wallets around the world much faster, and that's what Spark enables.
I'd be remiss if I didn't ask, where does the yield come from?
Well, I mean, the yield comes from the reserve, and then it's the varying opinions on whether you're authorized to do that or not, but outside of the US, not a problem, right, if you wanted to do that.
So that's the interesting thing, too, just kind of on the regulatory front. And you said earlier, it's like, it doesn't matter to you from this perspective, but obviously, like, you are still running a company. The U.S. has some interesting laws about all this, money transmitter stuff. Is that something that you guys are kind of like constantly battling with still? I mean, that it is, because it is a reality of doing business in the U.S. As you mentioned, other jurisdictions are more friendly to this still, even with the friendliness of the current administration. So, I mean, how much, what would you like to see, I guess? Is there something on the regulatory side that would be beneficial to you guys?
No, I think we have what we need, honestly. I think we have what we need, and enabling the first US bank to enable global payments for millions of customers in the US, public company, using Bitcoin is a wild thing to even be here on stage and say, right? It's like even last year, having that be a reality would be crazy. And they're doing it, their compliance teams are very happy, they're excited, the consumers are raving about it on X, like it's incredible. They send money back home in Mexico in 1 second for the lowest fee ever, and they don't even know they're using Bitcoin. And so the fact that we're here with a regulatory framework that allows us to deliver a service to a regulated federal bank, public company in the US in 2025 shows that we're open for business, like as a country, for all things digital assets, crypto payments, Bitcoin, stable coins, et cetera. So I think we have what we need. I mean, of course, I would love for all kinds of other more long-lasting legislation to be passed to ensure that a future administration doesn't reverse course. But I'm focused on building on Bitcoin and building payments experiences right now.
I love it. So I'd like to talk a little bit, you touched on it earlier, just on the kind of custodial versus non-custodial. Obviously, on Bitcoin Layer 1, there are not enough UTX, like not everybody's going to have a UTXO, right? It's not a reality right now. That's probably okay. You're talking about people using Bitcoin, the network, without even knowing that they're using it because it's just a better rails for payments. It's a better network. Do you think, I mean, is self-custody something that we should strive for as many people as possible? Or is this something that the reality is that maybe a lot of people don't actually want that sort of responsibility? There's something scary about that, right? Because there's no customer support to call. It's like you screw it up, it's done. But what's your perspective on that?
Yeah, I mean, look, I think there's so many dimensions to that conversation. First of all, I think obviously like the true self-custody is a UTXO on layer 1, right? It's not like any layer 2, it's not Lightning, it's not it's not Spark in the full purity of self-custody, because there are trust assumptions that you make the minute you leave L1. No matter what you use, the minute you leave L1, there are some trust assumptions you're making. And the question is, what is the balance between trustlessness and utility? I personally think, of course it's self-serving, but I also believe that we've hit the right spot with Spark, because the utility is super high, and we see thousands and thousands of builders joining Spark and the Spark ecosystem every week, building new wallets, building new tools, building new money movement capabilities on top of Bitcoin for the first time in years. And so we're unlocking a lot of creativity and a lot of builder energy. But I'm not going to suggest that you should hold all of your Bitcoin on Spark or on any L2. Like, if this is your life savings, like, you shouldn't. And then, of course, there's the perennial debate of, do you hold your keys? Do you put it on a custodial service? And like, to each their own, right? It's like, I'm not here to advise people on what they should do. Of course, we should have better self-custody solutions. And I think the market is getting better and better in terms of, not having to have an unrecoverable seed phrase store on a piece of paper somewhere. I think we've come a long way. But yeah, I think it's an arc of like trustlessness, utility. What is the purpose at the point in time? If you're trying to transact and move money really quickly, really cheaply, spin up billions of wallets, etc., you're not going to do that on L1, and you're probably actually not going to do that on Lightning either. And so, the question is, what do you use for what purpose?
So let's talk about Lightning a little bit, because you mentioned that you guys are backwards compatible with Lightning. You started building on Lightning when you started Lightspark, correct?
Correct.
Okay. There was a shift away from that towards building out Spark itself now. So what triggered that shift? What was the deficiency, I guess, in Lightning, or how do you look at that? What forced you to kind of say, we need to build something new here versus just use the existing Lightning rails?
I mean, I'm not sure I would characterize it as a shift away. We're still big fans of Lightning, and we think, again, like back to my comment, it depends what is the job to be done. And I think Lightning is fantastic if you're trying to move money between custodial entities of some kind, or if you have a hop that is actually custodial and can actually front the transaction for you, it's great. And ultimately, I think, if we end up in a world where we have many different L2s for different purposes on top of Bitcoin, I do think Lightning will be the connective tissue of all of these L2s to settle liquidity in real time between these L2s, if this is where we end up. But I think Lightning has limitations. The fact that it's a channel-based system is problematic. It's problematic if you want to do self-custodial wallets at the scale of billions, because you need to park liquidity in front of every channel for every wallet for incoming transactions. Economically, totally not viable. And I think it's also going to be complicated for issuance of assets, so like tokens, stablecoins, etc. I think it's going to be complicated because of the channel system. And the solutions to actually compensate for the problems caused by the channel design are all end up all being either centralized or regulated activities, which is a problem for participants. And so we wanted to actually, we worked more than probably any company in terms of investment and engineering time on Lightning. We pushed the boundaries as far as we could, and then we realized for self-custody and issuance of stablecoins, not going to work. And so we had to build something, and if we didn't have to, trust me, we wouldn't have done it. And it turned out that I think Spark is solving these problems because we're seeing so much influx of developer and builder energy, because suddenly you can build amazing wallet experiences with Bitcoin and stablecoins on top of Bitcoin at a super low cost and in a very efficient, easy way.
I love it. We have a couple minutes left here. I just kind of love to know what your vision for the future is. For the next couple halving cycles, let's say, where do you plan to take this? What's kind of the goal? What's the mission right now?
Yeah, so I mean, long term, our hope is we can help with all of you and many others make Bitcoin the open money network for the internet, or the internet for money. And that we end up moving trillions of dollars a day on top of Bitcoin collectively by connecting Bitcoin in real time, connecting real-time Bitcoin to all of the endpoints that contain money that needs to move money from point A to point B, and building a variety of services. So in that way, Bitcoin will become part of everyday's transaction in the background. But then gradually, what we will see happen is a proliferation of wallets, embedded wallets, self-custodial wallets, all kinds of different forms of wallets that will contain stablecoins and Bitcoin. And it's going to become like basically a slow but steady way to make Bitcoin the asset more part of everyday's transactions for billions of people at the same time. And so it's kind of a 1-2 step of the infra, the invisible, fast, real-time, cheap Bitcoin settlement, and then the asset also traveling on top of that network gradually, because you've proliferated wallets everywhere and people have Bitcoin.
I love it. Maybe just in the last minute, I'd say if there are any builders listening who want to build on top of this, where should they go? What should they do if they want to start hacking away? Yeah,
so 2 things. If you're building, if you want to build on top of Bitcoin and stablecoins, go to spark.money, and we have all the documentation there. And last week we announced a new service called Grid, that allows for easy on and off ramps with 65 different countries, real-time domestic payment systems on Bitcoin, and also allows you to spin up wallets and send BTC and stables to Spark wallets. And this is at grid.lightspark.com.
Amazing. David, thank you so much for your time. This was a pleasure.
Thank you.
Thank you, guys.